Institute of Financial Accountants and a member of the Australian Institute of Company Directors. So this is one of the rarest position an individual member from academia will be holding it. And so he is closely connected with the industry in his area. And Professor Luckmika completed his PhD from Swinburne University, Australia. Prior to that, Professor Luckmika completed Bachelor of Science honors in Cloud Security and Artificial Intelligence and Master of Professor in Professional Accounting, Master of Commerce, Graduate Certificate in Higher Education, and Master of Education as well. And he is not stopping now. He is also taking a lot of leadership courses and leadership programs from the Harvard Business School. And he was also the Director of Teaching and Learning and Associate Dean of Teaching and Learning at the Department of Accounting, Deakin Business School. He was conferred the Vice Chancellor's Award in multiple years for teaching excellence, industry engagement, and for his long service to the Deakin University. He has also received many faculty and departmental awards, and he consistently demonstrated sustained excellence in teaching and leadership in teaching through being proactive, innovative, and out of the box. And as the Director of Pathways and Partnership, he also set up a number of pathway partnership for the Deakin University, and he has also been instrumental in implementing a number of teaching and learning leadership initiatives. And he has been working on technology, course design, cloud-based curriculum design, assessment design, and teaching. He has also played a key role in introducing an ERP gaming platform, Monsoon Sim, as a teaching and assessment tool, Deakin Jenny, that is Siri or Cortana-like platform for education. And Professor Perera is also a researcher par excellence, specializing in corporate reporting, professionalization of accountants and business professionals, and accounting education, and has published many of his work in A-star and A category journals ranked by ABDC. And he has a close collaboration with business professional bodies, industry partners around the globe like AICD, Law Institute of Victoria, IPA, CPA, ACCA, and KPMG, to name a few. So Prof. Luckmika is a mindful trainer as well as a lifelong learner. We are fortunate to collaborate with you, Professor. And with these few words, actually, he is a member of the committee in very many countries to assess the corporate governance parameters and reporting parameters, especially for integrated reporting. And we are really fortunate to have you as a collaborator, Professor. With these few words, I invite you to deliver a lecture on integrated reporting. And integrated reporting, he is the mouthpiece of International Integrated Reporting Council for education purpose. So you are going to hear from the horse's mouth what is integrated reporting, how it is done, what are the different components, and he will be elaborating on this. Thank you so much, Professor. Now over to you.
Thank you, Professor. I think you are too kind in your elaborate and most what's the word, collegial introduction, and very it's too much, so you don't need to go through all that, but thank you very much. Okay, so very quickly, so this is part of a research grant that is cross-institutional with Professor Charumati and myself and a couple of others, where we got a grant from your federal government, from the Ministry of Human Resource Development. And as part of it, we have this collaboration going, and I'm actually very honored to be a part of it with Professor Charumati. So thank you, Professor. It's an honor to be here and to present to your esteemed group of students. Right, so how I work is that I'm happy for you to ask questions. I'm happy for you to come on camera and be interactive. But I would like you all to have the microphones muted, but cameras on if you can. But if you want to ask a question, I'm happy for you to unmute and ask a question while I'm doing the presentation. So I'm going to stick to around 1 hour at most. So we'll try to finish off by 3 o'clock. And I'll try to cover as much as possible in terms of the basics of integrated reporting and integrated thinking. So just to give you a background, International Integrated Reporting Council was originally formed in 2010, and it was led by Professor Mervyn King. So Professor Mervyn King was the former South African Supreme Court judge, and also was the was a chairman of the Bank of England, and he's also the inaugural chairman of the Integrated Reporting Council. So again, who is the IIRC? The IIRC is a group of organizations, not-for-profits, accounting bodies, investors, regulators, and standard setters who have come together to be a part of this broader group. I'm getting some static. Can everybody
Sir,
please
I am
go
also
on mute?
actually, I request all the students to mute your mic.
Can everybody please mute yourself? I'm getting some background noise. I'm still getting background noise. Can somebody whoever is unmuted, can you please mute yourself? Okay, I think we are all right now. I'll just mute everyone. Bear with me. I'm going to mute everybody. Okay, let's continue. So at the moment, the chairman or the council chairman of the IIRC is Connor Keogh. He is one of the senior administrators at McKinsey & Company, one of the largest investment companies in the world. Barry Melancong is the board chairman. Barry Melancong is the president and CEO of the AICPA, American Institute of Certified Practicing Accountants. Charles Terry is the CEO. He has now been made CEO. He's no longer interim. Liz Prescott is the technical director, and Professor Mervyn King is the council chairman emeritus. So that forms the executive of the IIRC. So there has been a global adoption of integrated reporting, and India is also one such country. So India is at very early stages of integrated reporting, and the original move to integrated reporting in India was actually initiated by one of the greatest minds in your country, the former chairman of your Securities and Exchange Commission, Mr. U.K. Singha. He is the same person who actually requested companies to, donate a percentage of their earnings to ESG or ESR initiatives. So he's a brilliant mind, and he's someone I respect very much. And I had the honor of meeting him a couple of times when I visited India a few years ago. So it's happening in many countries: South Africa, UK, Japan, Australia, India, Sri Lanka, as you can see. And US, China, and ASEAN is the next target that we're looking at initiating. So Sri Lanka is already on the road to being in the widespread adoption stage as well. But I'm hoping that in time that things will develop in other areas of countries as well. Right. So I think I've already gone through this. So I also want to highlight another person who is involved with the IIRC's Michael Bray over here. He's actually one of my colleagues. He's also director of the IIRC operating areas. So he's the director of in-country engagement. He's also a research fellow at KPMG or a professor of practice at Deakin University as well. Okay, so sorry, I'm getting some feedback again. I'm muting all the newcomers. The mission of IIRC is to establish integrated reporting and thinking within mainstream business practices as the norm in public sector and private sector. Okay, so the vision is to align capital allocations and corporate behavior to wider goals of financial stability and sustainability development through the cycle of integrated reporting and integrated thinking. Now, just want to find out if you can just write in the chat, how many of you have actually heard of integrated reporting before? Can you please let me know via the chat what your thoughts are on integrated reporting. Have you heard of it? Is there anything that you anyone? Okay, so Kavya, you have said that you have not heard of it before. Okay. Anyone else? Okay. So majority of you have not previously heard of integrated reporting, but now you have. Okay. So integrated reporting, in essence, it is what helps companies report and also better understand their business and better align their internal aspects of their business. So in other words, you all are MBA students, isn't that right, Professor Charumati? They are all MBA students, yes? So as MBA students, when integrated reporting and integrated thinking is essentially a mini MBA, okay? It helps a business understand its strategy, understand its resources, how it creates value, how to better align internal barriers and structures, or to break internal barriers and structures to make a better functioning organization, and through which the end product is the integrated report. So report is the outcome, not necessarily the process, okay? Though it's called integrated reporting, it should have originally been called integrated thinking, but again, the concept has now spread out, so the changing of the name is a little bit difficult. Right, so the integrated reporting framework consists of a number of key things. So first of all, we'll talk about what an integrated report is. An integrated report is a concise communication about how an organization's strategy, governance, performance, and prospects in the context of its external environment lead to the creation of value in the short, medium, and long term. In other words, it's purely a very strategic document that provides you as the organization with how to communicate its business strategy, its business processes, its resources, and how it creates value to its different stakeholders. Now, I want to emphasize the term stakeholders and not shareholders. So the focus is for all stakeholders and not just shareholders alone. Okay. Right. So basically, there has been some latest developments in integrated reporting where there were 3 topic papers discussed in the last year, where the IRC called for updates, and they have just updated and released the new framework out for you. So
Agrima and Dr. Madan, please can you mute your phone? Professor Luckmika, can you mute all the people from your side?
Yes, I will do that. Right. Okay, so I'm going to talk about the key fundamentals of integrated reporting or integrated and integrated thinking. Okay, so let's look at the principles and benefits of integrated reporting and integrated thinking for organizations. So integrated reporting framework is made up of 3 elements: fundamental concepts, content elements, and guiding principles. Okay, so they are the principles or the elements of integrated reporting. Okay, so there are a couple of benefits for organization, to the providers of financial capital, and other stakeholders. So some of these benefits are, for organizations, we have focus on non-financial issues driving financial performance. So we focus on things that are not necessarily financial, but other aspects that may result in financial gains as well. It helps us to better identify business risk because we're talking about short, medium, and long-term planning. We also look at the breakdown of internal silos. So one of the biggest problems with many large or medium-sized organizations is this concept of internal silos. Okay, so internal silos does not provide good efficiency in an organization. So integrated thinking and integrated reporting helps to break down this aspect. There's a common understanding of business models. throughout the organization. So when we implemented integrated thinking and integrated reporting at Deakin University, I was one of the consultants in that process. We managed to break this internal silo concept because of the fact that different departments and different divisions started talking to each other. And that created a positive role within the organization in itself. So for the providers of capitals, I would like to go beyond just financial capital and talk about the concept of providers of different capitals. So reports which are easier to understand, increasing confidence in the long-term viability of the company, helps decision-making and capital allocation, different capitals, okay? And other stakeholders also have the same benefits that come through. So in terms of integrated thinking in itself and integrated reporting, there are three fundamental concepts that we talk about, okay? The three fundamental concepts are the business model, the value creation process, which is this here, and this is the business model, also known as the octopus diagram. And then we have the 6 capitals. So the 6 capitals that we talk about are financial capital, manufactured capital, natural capital, intellectual capital, human capital, and social and relationships capital. So these are the 6 different capitals. So at the moment, if you look at a financial report or an annual report of a corporate, it purely focuses only on 2 of these financial capitals, and in some very rare cases, 3. Okay, but they are spoken in isolation and not as an integrated manner. So that is a difference. So most annual reports in any country at the moment talks about financial capital, and we'll talk about manufactured capital, and in very rare instances they may talk about natural capital, but in isolation and not as part of a core report. They'll have a separate sustainability report or separate GRI report or something down that lines. So this actually goes beyond that, okay? So what is integrated reporting? Content elements and guiding principles helps us to identify what an integrated reporting is, okay? So it helps us to strategize and allocate resources in a most efficient manner. It helps us to identify risks and opportunities. It helps us to understand organizational overview and the external environment. It helps us to understand governance, what the business model is, what the performance of the organization is, how do we prepare the organization's reporting structures, and what is the outlook of the organization. So if I put it in very, very simple terms, in layman's terms, what an integrated report does is it talks about the story of an organization. So it's about telling your story. For example, if I ask someone, for example, let's say Madan or Rishika, if I ask you to tell me about yourself, there are different things that you will talk to me about. You will tell me where you were born, where your parents were from, what were your parents doing, and which school you went to, what are your aspirations, why are you studying, what are your hopes, and something like that. So it's very similar. So an integrated report is about telling that story of the organization. It tells about what the governance structure is, what the vision and mission is, what its strategy is, what are the resources and how does it allocate resources, what are the risks, how is it performing at the moment, and what is its future aspirations. On top of that, it talks about its business model. What is the business model? What are the inputs of the business model? What are the business processes that convert the inputs into outputs? How do we do that? What are the outputs and what are the outcomes? Now, there's a differentiation here between output and outcome, okay? We need to be very clear on those differentiations, okay? So in terms of the content elements, I've just spoke to you about it, and the guiding principles that leads to these different aspects are the strategic focus and future orientation, stakeholder relationships, materiality, conciseness, connectivity, reliability and completeness, and consistency and comparability. So these are the different guiding principles that we talk about in integrated reporting. Okay, so to put it in very more simple terms, we talk about the 4 concepts approach. So what with, how, and why. So that is what explains an integrated report. What is a realization of the purpose, execution strategy, management of risks and opportunities to create value over the short, medium, and long term. With what? What is the resources we use for this purpose? How do we do it? The business processes and why we do it is the purpose, vision, and mission of the organization. So again, if I talk about it in terms of the three fundamental concepts, value creation, the capitals, and the value creation process, this is how it all links into the what, with, and how strategy that I just spoke to you about earlier. Okay. So integrated reporting is not a new reporting framework. It's not a new reporting initiative. It's not a new report. It's not another form of sustainability reporting. And that's a mistake that everybody makes. Everybody thinks, oh, integrated reporting is a sustainability report. It's not. Okay. There are no forecasts, no projections required. So what is it? It is a business initiative to make your business a better business. Okay. It should be tailored to individual organizations. So you can't outsource writing your reports to professional marketing firms or media firms to do an integrated report. Okay, because it's about telling your story or the organization's story. It is investor friendly. It is material. Okay, it is material. We only talk about the material things in the integrated report. Now, how is this relevant to SMEs? Can anybody think of how integrated reporting would be relevant to SMEs? I'm happy for you to put some comments down on the chat, please. Anyone? I'm happy for you to unmute and speak if you have any comments, please, and then mute yourself once you finish. So what do you think? What are your thoughts? How would integrated reporting and integrated thinking help SMEs? And that is the purpose of this course, right? We are focusing on SMEs. What do you think? Anyone? Come, don't be shy now. I know that you guys are quite talkative, so please, I would like somebody to speak up.
Students, please air out your views, even if it is wrong or right. There is no right or wrong views on his.
Absolutely. There's no wrong or right answer. But please unmute yourself and come on video. And I would like everybody who can to come on video.
Yeah, please switch on your video, all of you, please.
You see, I studied last year at Harvard University, at Harvard Kennedy School. And one of the requirements in all the lectures was that you must have your video on at all times. So my lectures my lecture times was 12 midnight to 3 a.m. in the morning because of the time difference. And I still had to have my video on, and I was having so much of coffee just to keep myself awake. So I'm sure you don't have that problem at the moment. It's 8:30 a.m. They are actually closing in on 9 a.m. So please come on video and tell me what you think. What is the benefit of integrated reporting for SMEs?
Students, please interact and keep your videos on. You meet the professor, see professor, and show your face once, because he is your course teacher also now. Yes.
Hello, sir.
Yeah.
Yes, go ahead, Mama.
Sir, it's like the potential to growth for the SMEs are very high. So it will be helpful for, it will be beneficial for the small and medium enterprises.
How would it be beneficial? How would it help growth?
Sir, can I add a point?
Yes, of course.
In this integrating report, we have all the modules of business. So they can have a clear track of their business in each and every step.
Okay. So one of the points is to better understand their own business. In other words, better understand their own strategy of their business. Okay. So that's one point. And the second point is, yes, what Mohammed said earlier, the growth aspect of it. What allows a company to grow? It is the funding, external funding, right? So if you have a clear strategy, if the SME has a clear strategy, clear business model, clear identification of its resources, how it is using its resources, and the outputs and outcomes, won't it have a better and a very clear report to give to the providers of funding, for example, big banks? What do you think? Yes? So that is one other way of looking at it from that perspective. Okay, right. So let's move on. So I think you get the gist of what it is and how it is relevant to the organizations. Okay, so some of the language that you need to watch is that some organizations claim to have an integrated report, but it is not an integrated report. Okay, they may not be integrated report in substance. They just have a name called integrated report, but they're not integrated reports. Sometimes integrated reports are not called integrated reports, but they do follow the principles very clearly. Another example is the assurance. If you look at CP Australia and CBUS, they both have the assurance components involved. And also, I was actually a consultant for a company in Sri Lanka, one of the top 50 listed companies in Sri Lanka, SoftLogic Financial Services. We have become, or my consultation process ended a few weeks ago, and they've just finished their integrated report, and they have now become the 7th report in the world to have IR assurance. So there are only 7 reports globally. So I was very pleased to be one of their consultants in that process, in their journey of getting the IR report to a position where it was ready for assurance. Okay, so we have to consider these aspects as well. So here's an example of the CPA's report. You can look at look at some of the other reports as well. Chartered accountants are moving towards integrated reporting in Australia. The IPA, Institute of Public Accountants, is also moving towards integrated reporting in Australia and so forth. So in Australia, it's now becoming more mainstream. Most organizations are having elements of integrated reporting and moving towards that. Right. Do you have any questions up to this point in time? Any questions? Okay. So what are the drivers behind the development of IR in a global and Australian context? Okay. Now, this is a very interesting slide. Have a good look at it. Okay. In 1975, 83% of a company's balance, what do you call it? Their books. Okay. Statement of financial, or what do you call it? The balance sheet. Okay. Now they call it a balance sheet. Earlier they called it a statement of financial position, but they keep on changing the names all the time. So now it's again called balance sheet. Okay. So balance sheet, 83% of their balance sheet were actually tangible assets, meaning assets that really had some substance to it, physical assets. Only 17% were intangible assets. But fast forward a couple of decades, in 2015, it has turned the other way around. 87% of a company is now what? Intangible assets. Intangibles. Okay. So that is a big issue, because now if you take Facebook and all, these companies are worth billions of dollars, but what is it actually worth? Is it their property value? No, that is only 13%. Their value is more on the intangibles, and that is why, and that is where the business processes need to change in order to accommodate these different circumstances. Okay. So I think I don't have to focus on this one. This is more Australia specific, so I'm not going to spend too much time on this. But this particular one is very relevant. So it gives you a mosaic of the different frameworks that are available globally and how the IIRC's framework is different from all of these. So if you look at the CDP, Corporate Disclosure, Carbon Disclosure Project, CDP, which gives out data. So they only look at environmental capital. They talk about primary investors only. Okay, and the direction of impact is given impact on organization and impact by the organization. So you can see that if you look at the integrated reporting framework, IIRC, it actually ticks all the different boxes. Okay, it ticks all the different boxes, and that's why it has become such a superior framework. Now, I also have some good news to give you. As of end of this year, IIRC and SASB, that means the Sustainability Accounting Standards Board, which is a global body, SASB, will be merging to form one super body, in which case most of these other standards will also merge with the IIRC and the SASB into one major unifying global body with a common set of standards. So which is a great achievement and a recognition of the benefits of IIRC's framework. Okay, so SASB has agreed to adopt IIRC framework as its key framework. Okay, so there is some positives happening there. So as I said earlier, the financial reports or the annual reports at the moment look at financial and manufactured capital in isolation. Isolation means not as a combined look. Okay. Sustainability reports look at natural and social capital. There is a gap in intellectual and human capital. However, the integrated reporting framework looks at it from a 6 capital perspective, where it is looked at as a holistic view as opposed to a standalone singular view. Okay. So I've already touched on this in terms of how the tangibles changed. Now, there are different mosaic of incrementalism in reporting. So there are voluntary reports. This is common to the globe. There are what you call the mandatory reports, and there are voluntary reports globally. So if you look at the voluntary reports, we have the annual reviews, investor packs and presentations, other voluntary reports, including websites. Sustainability reports are voluntary in most cases. The mandatory reports are in most countries: corporate governance report, remuneration report, financial statements, director's report, results and announcements, other legal obligations, and continuous disclosures. So there's so many different reports that are there at this point in time. So the integrated report helps us to combine all these things into one strategic report in going forward. Okay. So here are some global examples of integrated reporting that is happening at the moment. So there is some academic evidence shows a very strong relationship with the cost of capital and integrated reporting. There's a paper by Mary Barth. There is the concept of integrated reporting where it's building momentum in different countries. So there are a lot of things happening at the moment on a global scale. So how does the Sustainable Development Goals, or SDGs, form a basis of or combine or associate with integrated reporting and integrated thinking? So there is this overlapping or congruating point of connection between the SDGs and also integrated reporting. Now, I did a presentation about, when was this? Last year, actually 2019, the year before last, 2019, or was it last year? Sorry, it was actually last year. My apologies. Last January, I was in India, where I was invited to present to one of your government ministers, Minister Piyush Goyal. I think he was the Minister for Railway and Commerce. Professor Charmati, is that correct?
Yes.
Okay, so he was the chief guest, and I was asked to present to him on the importance of SDGs on your Honorable Prime Minister's goal in creating a large economy in the future in India. So I was asked to present on the relevance of SDGs and SMEs. So one of the things I did was I talked about how SDGs are propagated by SMEs and how they need to tap into these untapped SME resources in order to meet that government achievement. So actually the Honorable Minister requested me to send through the presentation slides as well. And apparently there is some policy developments which are being implemented through that presentation as well. So this was through the Institute of Chartered Management Accountants of India, ICMAs. Okay. So in that, I'll see if I can send that presentation through to you if I can find it. So that, and if you look at YouTube, if you Google my name, that full presentation is also there on YouTube as well. Okay. So there are a lot of these other initiatives which are demanding different information. So if you look at Australia, there are some organizations that are already on this way. We got Deakin, we got Australia Post, ANZ Bank is one of the top 4 banks in Australia, Vic Super, Lend-Lease, and all these other organizations. Okay, so if you look at the mainstreaming of integrated reporting in the current environment, we have the IASB's management commentary practice statements, which has come out in 2010, and there was a new exposure draft that has come out in 2020. So I'm not going to go through in great detail with this because I'm looking at a holistic view of integrated reporting at the moment. So this is the most important aspect of integrated reporting. Why is it beneficial? What are the benefits of integrated reporting? And effectively communicating the benefits and challenges of integrated reporting. So before we go here, does anyone have any questions? Does anyone have any questions? I'm happy to take any questions on the chat. Now remember, one of the most important things is to ask questions, because when you ask questions, you learn. So I used to sit always in the front row of every class I physically go to, because I'm attentive. I can't fall asleep, because if I'm right in front of the class, the lecturer is always looking at me. So I know that I won't fall asleep in class. Secondly, always ask questions, because asking questions is a very good thing because it helps you to learn. Don't worry about making mistakes. Okay, I have made enough mistakes in my life and asking dumb questions, which I thought was dumb. But that doesn't matter. Every single question has its purpose. Every single question is good in its own right. So if you have a question, please ask.
Hello, sir. Good morning. This is Pankaj Jha here.
Yes.
How does an SMEs startups in India get help from IIRC for preparations of integrated reporting? I mean, startups are the new venture.
So one of the ways in how SMEs in India can get some help is not directly through the IIRC, because IIRC is a global organization that is, it's like a strategy organization. It doesn't provide individual help.
Financial freedom, there are 3 capital models.
So what it does is it actually provides some kind of guidance through in-country or third-party organizations. So in this case, SMEs can probably contact the SPARC project through Professor Charumati, where we have connections with the Deakin Integrated Reporting Center, where we can collaboratively through Pondicherry University Department of Management or Faculty of Management, we can provide some feedback to those SMEs. So there's another addition here. There's another possibility here, Professor, for you to be a center of excellence for integrated reporting in India.
Yes.
So you have the potential to collaborate with possibly ISB as well, where I think I mentioned to you earlier that Professor Sanjay Kallapur is doing a fair bit of work in this area as well.
So Pankaj is actually doing research on startups. So
Okay.
he's interested to know whether startup, again, actually they are registered as SMEs mostly.
Yeah.
And so how they can leverage on this, because startups, the main issue is funding.
Yes.
So
So
definitely that might help SMEs
Yes.
or startups to access.
So probably if they can attend our conference, Prof, that may be one of the first point of calls for them, because there'll be some work done there on how to get started in integrated thinking, integrated reporting, and also specifically in relation to the SMEs as well. Because if IFRS and IIRC framework doesn't go separately, they go hand in hand.
Yes.
Any other questions?
Yes, sir. Sir, I have a question, sir.
Yes.
Sir, what is the difference between usual reporting and integrated reporting, sir?
Okay. The main difference is the 6 capital view. So we can actually move from the existing reports to a 6 capital view, and it's also a strategic report. It doesn't talk about nonsense. It talks about materiality. it talks about only key things. So there is some detailed differences. So you don't need to provide 2 reports. So you can, by applying the principles of integrated reporting and integrated thinking, you can convert an annual report into an integrated report. I talked about 2 aspects. I talked about the guiding principles and content elements. So if you apply those things into an annual report, it becomes an integrated report. Does that make sense?
Yes, sir.
Okay. Now there was another girl who wanted to ask a question. Yes.
Yes, sir. Professor. Sir, you have already mentioned 6 capitals.
Yes.
So is there any accepted models for valuing these capitals?
Valuation is a very interesting point. There isn't any specific model. There are some capitals can be measured based on some models. For example, the financial capital, you can follow IFRS, International Financial Reporting Standards. But other capitals, that's a little bit more trickier. Okay, so there are different ways in measuring capitals. Some can be quantitative and the others can be qualitative. So not all capitals can be measured in dollar terms. Okay, so for example, one way of measuring human capital is the number of accidents that happen, or the level of safety resources that are in place. So there is no, if you talk about the quality of health related education or health and safety education, you can't measure that by a number. That is by the level of resources. So you have to have some kind of qualitative measure. So there are different ways in measuring different capitals, but again, measuring capitals is an entire course in itself. So I'll probably have to talk about that for about 8 to 10 weeks if I'm just focusing on measuring of capitals. But what you need to know at this stage for this kind of level is to understand that there are different ways of measuring, and how we measure different capitals depends on what type of capital we are measuring. Okay. Right. Any other questions?
In fact, IFRS allows these judgments for fair value measurement, and it's a big topic of research now.
Correct. Yes. Okay. Any further questions, or can I move on?
Yes, Prof. We have 15 more minutes. You can.
Yes. So I think I better move on then. Okay. Right. So I'm not going to play this video, but I will send some video clips later on for you to have a look at in your own good time. Okay. So again, I touched on some of the benefits in a previous slide on how it benefits the organization, the providers of financial capital, and other stakeholders. So I'm not going to repeat that. So here are some real benefits that are mentioned by the CEO or CFOs of large organizations such as NAB and Lend-Lease in Australia. So they said it's more effective presentation of Lend-Lease's business model, strategy, and its 5 pillars. It said it saved us 6 weeks of management time in preparing a report. So it actually saved them real money by moving from an annual report to an integrated report. 6 weeks worth of work in an Australian context is probably, for a company as big as this, is probably a few $1 million. Okay. So if you look at the NAB, it says our annual report used to be read by 6 retired accountants from Tare. Tare is a location, meaning they're auditors. So they are the only people who actually read their annual reports. Our integrated report is read by thousands of people, their employees, customers, regulators. Our business story is now getting across a much wider audience. So you can see directly how moving from an annual report to an integrated report changed their viewpoints. Okay. So this is what I mean about the benefits of integrated reporting. Okay. Aligning stakeholder interests through long-term view and value creation. So integrated thinking is not just about, integrated reporting is not just about the short term. Unfortunately, nowadays, many investors are looking at it from a very short-term perspective. How can I make a buck and get out? That's not what integrated reporting, integrated thinking is about. It's about the long-term viability of an organization. Investors support integrated reporting as a route to better understanding performance in the short, medium, and long term. Okay. For example, BlackRock is one of the largest investors in the world. They control, I think, something close to $2 to $3 trillion. So Larry Fink is the CEO of BlackRock, and he said that any company that they invest on needs to have a strategic report. So in essence, what he meant by a strategic report was an integrated report. So let's quickly go through the IR framework. So the objectives of the IR framework is to support the information needs of long-term investors of different capitals. So when I say investors here, I'm not talking about just monetary investors. I'm talking about investors who invest different capitals in that organization. Okay. So I talked about the structure or the structure of the IR framework. I won't discuss this in great detail, but we have the fundamental concepts, which is the value creation for the organization, the 6 capitals, and the value creation process. We have the guiding principles, and then the content elements. Okay. So here is what we call the value creation concept. So value is created for the organization and for others. Okay. So how does the organization create value? It creates value through activities, relationships, and interactions. Let's look at the fundamental concepts, the 6 capitals. We have the social and relationships capital, the human capital, the natural capital, the intellectual capital, the manufactured capital, and the financial capital. So financial capital is easy. It's the money, the funding that the organization has. The manufactured capital is the tools, the equipment, the buildings, the resources that the organization has to produce those goods and services that the organization produces. The intellectual capital is the knowledge of the organization in order to produce its goods or services. The human capital are the people that the organization has within. The natural capital is the natural resources the company uses in its processes. Social and relationships capital talk about the networks. So for me, I am a very big fan of the social and relationships capital. Now, for example, Professor, our relationship is a classic example of social and relationships capital for both Pondicherry University and for Deakin University. So let me take the SPARC grant itself as an example. So it is a benefit to Pondicherry University because you're getting government funding. For us, it's also beneficial because we are also recognized for getting that part of the funding and also to contribute to the betterment of knowledge with your university, with your esteemed university as well. So that is a social and relationships capital, which has financial capital in it, which has manufactured capital in it, which has intellectual capital in it, which has human capital in it. So you can see that the connection here. So the one we would probably least use would be the natural capital in this particular context. But in some other contexts, there may be the use of these natural resources as well. Any questions? Yes.
So what was chance for biasing this, like they're misusing this, like they misrepresent or
Sorry, your question is not clear, Mohammed. Can you please repeat your question?
The organization?
There's a lot of static. Can you please
switch on your video and please talk clearly?
Hello, sir. Am I audible now?
Yes, much better. Yes.
Sir, there is a chance for misrepresenting these values, right, sir?
What do you mean by misrepresenting these values?
Like while expressing the social and relationship capital value, how can we express those values correctly, sir?
So that depends on an organization. So that is why I said earlier, each story, each integrated report is unique to the organization. I cannot directly answer your question without knowing what type of an organization or who the organization is. Okay, so it is up to them to decide who their social and relationships capitals are and how to measure them, either using a qualitative approach or a quantitative approach.
I think he's worried about the misrepresentation or the kind of window dressing in financial statements.
Yes. So the issue is here, when you're talking about a balanced report, so integrated report is about being a balanced report. So if you're talking about all good and no bad, the reader will understand that this is not a real integrated report. So we are saying that the users of integrated reports are rational, intelligent human beings who are able to recognize a report. And that is where the assurance of integrated reporting in comes in. I mentioned earlier that I was involved with a company that reports on, that reported recently to the Stock Exchange of Sri Lanka and was assured. So in that context, there is external assurance provided of this particular integrated report saying that it is actually saying what it does.
Yeah,
so that misrepresentation can be minimized by going towards external assurance of an integrated report.
One part, and again that fair value measurement, in case there is a conflict, that fair value measurement has to be accepted by the assurance people. So that
and also adding to that, in terms of social and relationships capital, there is no monetary measurement. So it could be a qualitative measurement, it could be a narrative measurement. You talk about the relationships that you have built with communities that you serve. For example, if you take Pondicherry University, you are serving the community in and around your area. You're serving the SMEs in your area. And you have a lot of, you also cater for people from the northern side of northern states of India. Because last time when I came there, there were a lot of students who had come from the northern provinces of India who are studying. So you cater for that as well. So that is your social and relationships capital. So it is clear for anybody to see. Now, if you claim something that you are not doing, it is very clear for the reader that this is not the case, because they will know about your organization. So you're only providing some negative impact inputs of your organization if you do that. Okay. So next, let's look at the fundamental concepts, the value creation process, or what we call the octopus diagram. Let me just increase the size of this a little bit more. So that it's a bit more clearer. Bear with me. Okay. So here we have what we call the inputs, which are the 6 capitals. We have the outputs, outcomes, which either increases, reduces, or maintains the capitals, the different capitals. We have the vision and mission of the organization. We have the risks and opportunities. We have the strategy and resource allocation. Performance is how the company is doing now. What is the outlook of the organization, or forward-thinking statements as we call it. The business activities that transform the input into output, and the governance structure that goes through the organization. And then we have the external environment in which the organization operates in. Okay. So this is what we call the octopus diagram, or the value creation process, how the organization creates value. Okay. How many of you have heard of a company called Cipla in India? Can I hear from you on the chat? How many of you have heard of a company called Cipla?
It's a pharmaceutical company.
That's right. Yes. Yes. So I had the chance to meet up with their CEO and CFO about 3 years ago and give them some advice and provide some input on their integrated report. So if you want to look at a good integrated report on how they do this, I would encourage you all to download the annual report or the integrated report. They call it an annual report, but it is an integrated report. Okay. Download this latest Cipla's annual review, annual report, integrated report, whatever they call it, and have a look at it. So you will see all these different elements in Cipla. Okay.
So last time you gave one assignment based on that one integrated report by a company.
Yes.
That international global company.
Yeah, I think last time it was that Marks and Spencer, I think it was. Or was it Marks and Spencer, or was it the fishing company?
I think fishing company.
Okay. Yes, I think Oceana. It's probably Oceana. Yes.
Oceana. So
yeah, that's right. So
you can do one assignment, Professor, and we'll have some weightage.
Yes. All right. I'm happy to do that. So I will send through an assessment task for you to go through. But I won't give you the Oceana report. I'll probably give you a new report. Okay. I might give you Cipla. Yes. Okay. So download Cipla, go through it. Your next assignment will be based on Cipla. Okay. So I will send you an assignment based on CIPLA, Professor. Okay.
Okay.
Right. So we talked about the guiding principles. There are 7 guiding principles: strategic focus and future orientation, connectivity of information, stakeholder relationships, materiality, conciseness, reliability and completeness, consistency and comparability. And then we have the content elements. Content elements talk about what are the elements that should be there in an integrated report. So you should have the organizational overview and external environment, a little bit of information around that. There has to be a little bit of information on the governance structure, a little bit on the business model, risks and opportunities, strategy and resource allocation, performance, outlook, basis of separation and preparation and presentation, and general reporting guidances. Right. We talked about the what, with, how, and why. So I'm not going to repeat that again, but I'll provide you the slides so you will have a copy of it to go through. But this is to put into context where these, the with, the what, the why, and the how fits in. So the with talks about the capitals. The what talks about the risks and the strategy. The how talks about the governance and the business model. And the why, the purpose, talks about the vision and mission, and also the external environment in which it operates in. And also the context is taken by the external environment. Okay. So there are different perspectives to value. I'm not going to go through again this concept of value, or this relates to the question that someone asked earlier about how do we measure different capitals. So it depends on how we measure value creation. So value is a very vague concept. There are different ways on how you can measure value. I'm not going to go through a great detail, but I will talk about it this particular slide. Value creation is the process that results in increase, decrease, or transformation of the capitals caused by the organization's business activities and outputs. Okay. So a classic example is, how many of you had breakfast today? Anyone, can you raise your hand or mention in the chat? Yes, if you had breakfast today. Okay. How many of you bought breakfast from outside? If you bought breakfast from outside, say yes. Okay. Is there anyone who bought breakfast from outside? Any dosa or any idli or anything like that? So nobody bought breakfast from outside today. Habib, what about you? Did you buy anything from outside today?
No, sir.
Or you ate at home? Okay. So nobody's bought breakfast today from outside. Is there even one person that I can take as an example? Okay. You all are pretty good in that case. You're not doing takeaways. Okay. That's all right. So I'll give an example. Okay. If I look at buying food from outside, you're transforming one form of capital to another. So what are you transforming? What is the business process, and what is the outcome or output? And what is the type of capital we are transforming it to? You're transforming financial capital into manufactured capital, right? So you're transforming money into something that will help you to produce goods or services which you produce. In other words, you take in that money, you buy some food, okay? And then that food goes into you to nourish you to do some work. That's exactly what the business model is about. The same thing, but in a business context. So we have the inputs, which are the capitals. We use the business model to transform those capitals into different things. Okay. So then you work and you replenish the financial capital. In other words, you work somewhere, you get some salary or you get a stipend from different grants, and you get that money again to get some more food. Isn't that the case? Yes. So you see the process, right? Okay. So there are interdependencies which we talk about. in terms of the different capitals. There are external environments that we need to look at. We need to look at the relationship with different stakeholders, the interdependencies of various resources as well. Okay. So you know what a stakeholder is. I'm not going to go through detail as to what the stakeholders do. Now, here's an interesting picture. Are there 4 logs or 3 logs? How many logs are there?
Prospective changes, sir.
Exactly. Depending on the perspective, you can either see 4 or 3. So that is why I said value is very unique. Measurement of intangibles is very unique. It depends on perception. And that is why it's very difficult. Okay. So we need to keep that in mind. So there are different perspectives in value. Value is very subjective. There are different ways of measuring it. And that goes again back to the question of how do we measure these different capitals? There are economic value, there are societal values, tangible, intangibles, and ethical and moral values. So if you look at it from a broader perspective, the Western values are different to the Eastern values. I'm from Southeast Asia. I'm originally from Sri Lanka, but my ancestry is from India. I'm what you call a Kaurav or a Kuru. Okay. You've heard of the Kurus, obviously. They were the bad guys of the Mahabharata. Yes. So unfortunately, I'm one of those bad guys or descendant of one of those bad guys, one of the Kauravas, but that's okay. Not everybody is bad, right? Okay. So if you look at it from that perspective, we have different viewpoints based on cultures. What we as South Asians consider as valuable may not necessarily be the value of Western society. So we need to understand the context of how we measure value as well. Okay. All right. Value and business. This is my last bit of slides, and then after that we are done. So we talk about shareholder value and stakeholder value, okay? And we talk about public value. So we talk about shareholder value, stakeholder value, and public value. So these are some of the 3 contexts that you need to talk about. What is the value added to the shareholder? What is the value we create for other stakeholders? What is the public value we create for the general public, okay? Right. Another important concept is to understand the purpose. In other words, the vision and mission. I don't like calling it vision and mission. It sounds very airy-fairy for me. So I like to call it purpose. Okay. An example is Australian Ethical Investments. This particular organization, Australian Ethical Investments, they have clearly said their purpose is to not invest in organizations that do coal seam, oil, weapons, tobacco, logging, exploitation, gambling, human rights abuses, and harmful products. So that's one way of looking at it. Unilever is another example. Their purpose is to make sustainable living commonplace. Okay, so you can see these different aspects of how integrated thinking and integrated reporting feeds in. Right, so that actually ends my presentation. I'm 5 minutes over, but I think we've done very good time in terms of going through all the key elements. I am happy to take 5 minutes worth of questions. I know I'm a little bit over, and I do have another meeting to run to shortly, but I'm happy to give you a little bit of time to look at any questions that you have and answer them right now. So please don't be shy to ask questions. Be open and ask a couple of questions, please. Anyone?
Sir.
Yes.
Sir?
Yes, sure.
Sir, you told that while we prepare the report, the externals will read that and understand it. So what was the chance? It will be more difficult for the common people to read and understand it, right, sir?
Not necessarily, because an integrated report has to be written in simple language. It is a story. You're not giving financial data alone. You're telling a story about a company. It's like storytelling. It's about reading a story. It's about telling the story of, or for example, in a religious context, you're telling a story of particular happenings. It's like the great epic, for example. It's about telling the story of that company. So not necessarily. It's not an annual report. An integrated report is different.
Okay, sir.
So storytelling and providing financial reports are two different things.
So it also includes the components like manufacturing and this natural reporting. So
Absolutely. So that is why I said, okay, without having too much of a confusion, download the CIPLA report and go through it and see.
So I understand that when it is about a manufacturing company, like Cipla is a pharmaceutical company, so it also has some accountability toward environment.
Yes.
So we can understand that. But there are many SMEs who are dealing in service sector.
Yeah. So it doesn't matter what company it goes to. For example, I'm actually consulting on an organization that called the Stroke Foundation of Australia. It's a not-for-profit organization that provides, it's a service-oriented organization for people who have suffered stroke, and they provide support. So it's actually a manufacturing organization. So they are actually, I'm one of their consultants. They are going towards their integrated reporting journey. Camp Quality Australia, that is also a service-oriented organization. The IIRC, International Integrated Reporting Council, it's a service-oriented organization. If you look at their integrated report, they talk about, so that's why I said an integrated report is unique to the organization. You have to decide what are the relevant capitals for you, and then talk about those relevant capitals.
Sir, how does it create a competitive advantage for the business, sir?
Sorry, can you repeat the question?
Yes, sir. How does it create competitive advantage for the business, sir?
Because of the ability to understand their own business better and also communicate that understanding to others very clearly. So in that context, if I was an investor or a provider of capital, I can very clearly see what the organization is about. What is their strategy? How do they allocate their resources? What are the risks? What is their current performance? And what would be their future performance? So it's a better way of communicating. So it provides better access to capital.
So I do have another question.
Yes.
How does it improve the transparency of a business, sir?
What do you mean by transparency?
Transparency, what I mean is which doesn't have any flaw or which is expressed.
Transparency of the company or the report?
Report, sir, report.
Okay. By giving a true and fair, balanced view, meaning not just talking about the good. So in integrated report, we talk about the positives and the negatives. So last time when I was in India at Pondicherry University, the assignment I gave, actually the company talked about the negatives as well, what they have not accomplished. So they have been very open about what they have not achieved. So that is what the integrated reporting is about. We understand that you can't have a perfect company in this planet. It's not possible. But if you are open with your flaws, that gives a more positive view of the company. I have time for one more question and then I have to call it a day.
Professor?
Can this integrated report be a replacement for the annual financial report, sir?
That is where it is heading. That is where it is heading in the future. So if you look at a crystal ball, and I would say in 5 to 10 years time, integrated reporting will be the norm. So BIMA Mall, right?
Yes, sir. Yes.
I'll give you the last question and then I have to call it a day. Go ahead.
Okay. So you have mentioned that there is no proper valuation model for capital valuation.
I didn't say that there was no proper model. I said there are different valuation models.
Okay.
So I didn't say there was no proper.
Okay.
Correction there.
Okay, sir. So what about greenwashing and fraud management?
Okay, so what about it? What is the context?
Actually,
and she's doing, she has selected a topic on forensic accounting.
Okay.
So we are trying to model the financial statement frauds by banks.
Okay.
So that is the context. I think she is having this kind of.
Okay, maybe we can have a chat on that because there is a different viewpoint there. So we might actually take that offline, and I might have a chat with you on that a little bit later. Okay.
Okay, Professor.
Okay, Prof. My apologies. I might have to go now. I've got another 3:15 meeting, so I thought I'll take the break time and still spend that time with you all. So I got about 3 minutes just to go and have a glass of water and come back for my next one. Okay. So my apologies once again, and thank you so much for the time and the invitation. And I'll probably see you again for a couple of weeks. I'll be taking this class for a few weeks, and I'm looking forward to working with some of you in the coming weeks. So thank you very much, Prof. Then I might leave then. Thank you so much.
Yes, please, you also mail me the assignment details, and we will surely ask the students to carry out.
Absolutely, Prof. And I'll make you a co-host, and I will leave, and you can still communicate on this platform with the other students. Okay.